As COVID is subsiding, economic growth is picking up pace. This has increased demand for retail and commercial loans. So banks are witnessing good credit demand. And digitization and financial inclusion have opened new avenues for the banking industry. These changes are clearly visible in payments and loan segments. RBI figures show that in March 2022, the gross non-performing assets of the banking industry has fallen below 6%. This is the lowest level of NPAs since 2016. In fact, net NPAs have also come down to 1.7%. This shows that COVID pandemic has not caused any significant trouble for the banking industry.
Everything is fine till here. Now let's talk about interest rates. Due to higher inflation, the cycle of an interest rate hike has begun. Now, the big question for investors is whether investment in banking stocks will give good returns or not. So let's talk about the impact of higher interest rates. This can impact the business operations of various industries. Margins of business are already squeezed due to higher input costs. Now, higher interest rates will intensify the pressure on margin. Another question is how an interest rate hike will impact banking stocks. Most of the experts agree that in the month of June, the 50 basis points repo rate hike was broadly in line with the market expectation. For RBI, tackling the high inflation seems to be a top priority. Loans linked with marginal cost of funds-based lending rate (MCLR) are becoming more expensive. FD rates are also inching upwards.
According to HDFC Securities report, the sharp rate hikes augur well for the banks, partly owing to RBI's efforts to ensure monetary transmission. The banking sector is coming out of a tough NPA cycle for 4 to 5 years. During the COVID-19 pandemic, banks created provisioning in anticipation of bad assets. However, bad asset creation has been lower than expected. Saurabh Gupta, fund manager equity, Quantum AMC says the rising interest rates are positive for larger banks. Credit growth should pick up and the banks should report good numbers. Some of the large banks are trading at a discount to their historical multiples despite improving fundamentals. However, the market analyst says the improvement hasn't translated into stock performance. Ajit Kabi of LKP Securities says, "We believe the share price performance is momentary, largely because of higher several rate hikes and geopolitical concerns. We may witness one more rate hike in the coming months and a little more correction in the share price. It will lead to a fair valuation for banking stocks." His top picks consist of Axis Bank, ICICI Bank, Kotak Mahindra Bank, HDFC Bank and SBI. You can see which stocks are trading below 52 weeks high. Investors should do a thorough research of the banks before investing in banking stocks. A financial advisor's help should be taken if needed.